In this presentation, we will give an overview of a bank statement, discuss the characteristics of a bank statement, and how we will be using the bank statement. Here is, for more accounting information and accounting courses, visit our website at accountinginstruction.info. Our bank statement. Note that the look and feel of a bank statement could differ from institution to institution, from bank to bank, but it will have some characteristics in common no matter what institution we're talking about, including it's going to have a beginning balance, it's going to have an ending balance, it's going to have a set time frame, typically a month. Doesn't have to be a month though. It may not be ending just on the end of the month, but whatever end period it is, it will be some systemized end period. So we'll have a definite cutoff, that being the point. Hopefully it's the end of a month because that's the thing that makes it easiest. Most institutions will have monthly statements, but if it's not on a month, that's okay too, as long as we have a set line, a set date, a beginning date, and an ending date. That's what's really important about the bank statement. Then we're going to have the other information, including details of the deposits, details of the checks. We'll discuss this a little bit more in a second. First, want to point out that the bank statement can be similar to something that we could get if we just downloaded, for example, for online banking from a bank feed or from just downloading transactions from the bank. If we are entering the information into the system in this format where we want to take it straight from the bank, typically the bank statement would be the best way to go. In other words, if we're working with clients or if we're doing our own books and we're trying to say we want to take just the information from our bank, enter that into our books and sort that information, then it's usually best to use the bank statement because that means that we're not going to get that overlap. The bank statement has a definite end. In this case, it's our first year, but at the end, if we were continuing, would have been the end of December last year, and now it's beginning in January. So we're going to eliminate the problem, in other words, of double entry, of entering the same data twice, and eliminate any problems of missing data because we messed up on the date. That's really helpful for the bank statements. So if we are doing something like bank feeds, or if we're trying to track the banking information in some other way, then just note that you got to be really careful of making sure that you have the dates in a similar fashion, or that you know that you're not duplicating dates or you haven't missed any dates. And even if you do that type of format, you're still going to want the bank statements at the end of the time period because it's still useful to do the bank reconciliation. The bank reconciliation, although it should be very easy in the format we're doing now because all of our data is coming directly from the bank, but it's still going to be something that is useful for us to say, hey, this is totally correct as of this point in time. What we have basically matches what the banks has. We may not have any timing differences considering the fact we're on a cash basis and taking this information directly from the bank, but we can still verify that it's reconciled and everything ties out completely. So even under this system, we will do that, and in order to do that, you really need the periodic statements, the ones at the end of the time period, the actual bank statements. Most institutions will still give a bank statement. So although they have online transactions, you may talk to customers or feel that, hey, you have online banking, you can get the transactions you want at any time to download them. But even if that is the case, they still will typically provide the bank statements, and it's useful to get those. So that's what we want. We want to start with those bank statements. Once we have those in our file, we will of course save the bank statement to our file under our customer data. So I'm going to go ahead and show you where that is at. So we're going to put that in our client folder here. Within our client folder, we've got it under the docs. So I'm going to put it under docs. We're going to put it under 2019 information and then January information. So within here, we've got the client provided reports. These are reports from the client or docs, as opposed to the reports that we will make, including financial statements. So we're going to go into this item here, and then here's the bank statement. Now, we may even want to go further in this and say that, this is the original bank statement, and maybe even copy, right click, I'm going to copy it and paste it. And then we're going to say that this is going to be the bank statement that we're going to use to enter data. And the reason we might want to do that is because we might want to mark up the bank statement in some way. We might want to put notes on it depending on if we can, whether or not what type of software we have. So that's what we'll do now. I'm going to open up this item then, which is a copy of it, which we can highlight and do things to it if we want. Right click on this, and also note that of course we could have a paper documentation of it as well. So we could then highlight on a paper format, but the docs could be in PDF format, and we can then open them in PDF format. It's really nice if they are in PDF format to have a system with 2 monitors if possible, so that we can have these things side by side with our QuickBooks data and be able to enter this information to it. So I'm going to right click on this just to show that we can then open with typically an Adobe Reader. So you could open it, in other words, without going online, and just open it with an Adobe Reader. If you just double click on the document, it'll typically open, if you're connected to the internet, to some type of online version to open it as well. Either way can be useful. Now I've opened it here in the Adobe Reader, which is a free program, so you can download Adobe Reader, and that means you can open it on the desktop. And also if any changes you make, such as highlighting the document, then that'll save those changes, whereas if you open it into an online version, it won't save the changes all the time. And so if you want to save those, then we can enter it into the Adobe Reader. As we can see, when we have the bank statement, we're typically going to have a beginning balance, and then additions and subtractions, and then the ending balance. This will be just a summary of what is going on. When we see this note first here that we do have a beginning balance, which means, hey, this isn't the first time of operations, meaning it didn't start at 0. So that's the first thing that might scare us. We might go, oh, well, that's kind of a problem. There's data that was entered before this time period. So that's okay. We'll show how to deal with that when we enter that into the system. And remember, that's okay that if we're taking on a client that already had data before this, it doesn't have to be the first time period of operations in order for us to start entering the data. What we will be doing now is drawing a line and putting the data as properly as we can from this system on forward. So if we can be similar to the prior system or copy some of the characteristics of it, fine, but we're not going to be entering all the data from the prior time period. We will enter this beginning balance, and note that it is from, of course, a prior time period. We'll enter it as a lump sum and discuss how to do that. Then we'll have the detail broken out on the bank statement in some way. In this case, we have the deposits broken out, and then the checks and the withdrawals broken out in separate items, separate columns. You may see some bank statements that have them in basically a debit and credit column within the bank statement in one vertical row, but typically they will be formatted. They'll have to be formatted in some way to break out what is a deposit, what is an increase to the bank statement balance, and what is a check, what is a decrease to the bank statement balance. So over here, we're going to show then, this will be an easy way for us to see the sum of the debits and or the deposits and the checks or withdrawals. All the deposits are going to be over here. If we were to add them up, they're going to add up to that $70,290. So if we add all the deposits up, that's the $70,290 that's going to be in our summary data. So this summary data is going to just give us a breakout of all the other information, or summarize all the information. And then the checks and withdrawals here, we have the checks and decreases laid out, and there should be more of them most of the time. We're going to have net fewer deposits than checks. Hopefully the dollar amount of the deposits are larger than the checks and the outflows, but that's typically going to be the case, that will be more in number in terms of outflows. And so most of them are checks here, but we have some others as well. Adds up to $49,087. That's this amount here. Few things to note as we enter this data. Note that deposits on this side, we have a lot less information. We don't have a deposit number as we have check numbers over here. And we don't typically have deposit information in terms of who's making the deposit. If we have online data, and sometimes when we download the data from the system, we may have a little bit more information than that. In other words, if we're dealing with a customer or client that does a lot of online transactions as opposed to receiving deposits, say by check, that's fine too. They'll still show up on the bank statement, and we may get more detail on the bank statement or on the online automatic deposits as well. If we do bank feeds and we have a lot of automatic payments, we might get more detail. That's great. However, we don't need more detail most of the time if the client has properly broken out their file or their account, their checking account for business as opposed to personal. All these deposits in the business account should, in essence, hopefully be from customers. The only other deposits that would not be from customers, we would think, would be deposits from owners to help finance the business, and deposits from possibly a bank or something like that. possibly like a refund from the IRS or something like that. But most of the deposits in here, we can assume they're going to be from clients. We don't know which clients. We don't know who. We're not going to track who unless we have more information. We're not going to put in customer details, in other words, into our QuickBooks data unless we have that information to do so. What we're going to do instead, and this is going to be laid out when we discuss this with the client or set up our system for ourselves, is say, hey, we're assuming that all the deposits are from customers. We're going to record them as an increase to cash and an increase to revenue unless you tell us otherwise or we see something unusual, in which case we'll ask you about it. So that's going to be the deposit side. On the checks and withdrawals, we've got most of the stuff information as checks here. And that may not be the case in some types of businesses. They may have done a lot of electronic transfers. And that's fine as well, because once we have the bank statement, we'll have that information as well. We just won't have a check number if they didn't assign a check number. We'll have electronic transfer data that'll give us more information. Either way, hopefully, we'll have the vendor information on the bank statement. Now, note that if you're talking about checks, then if the customer does a lot of checks, writes a lot of checks, we may not have all of the detail, depending on the banking institution of the checks. In that case, we could get the canceled checks from the banks. We can ask the bank for copies of the canceled checks from online banking or to get that information. Or we can have some system where we get the checks that were actually written from the customer to give us a copy of the checks. So hopefully on the bank statement, even if the checks were written, we can still get the canceled checks or added detail of who the checks were written to into our system, so that because we do need to know in this case who the vendor is, who we paid, because who we paid is going to give us an idea of what account we should select. On the income side, it doesn't matter as much because we just assume it's all income. But on the expense side, we can assume pretty much that it's all expenses. That's fine. But we need to break out the expenses between the types of expenses. Is it a phone expense? Is it a utilities expense? So we need more detail. And the only way to do that is to know who we paid to. And then based on who we paid to, we try to find out or think if we can know what type of appropriate expense account we should assign it. So note that the outflows typically have more information. We're going to have the date, which is not the date that we wrote the check possibly. It could be a lot later. But we're on a cash basis, so we're going to enter the data on the date it cleared the bank. If we do get the check information from the customer, then the dates won't line up because, of course, the customer is going to have written the check in the past, and now we're going to be entering that information from the bank who's got it way later, because whoever got the check must have deposited it, and then it must have cleared the bank before we can deposit it. But we typically will have a check number if it was a check. If it's not a check again, that's fine because we won't have a check number, but we should have more detail in terms of an electronic transfer. We'll have the detail given with the electronic transfer. And we should have some type of name, again, whether it be electronic transfer or by check, at least from the canceled checks if we have to get that information. And then we're going to have an amount. So we'll have that detail, and that's going to be necessary for us to just take this and enter it into our system. If we don't have some information in terms of electronic transfer or some things such as a withdrawal, if the customer just took money out of the bank, like an ATM withdrawal, just went to the bank and took money out, then that's going to show up just as a withdrawal. That's all we're going to have. So we might have something like that. And it's common to have some kind of bank service charges that the bank just took out of our account. And we're going to have to deal with something like that as well. So those types of decreases, anything that goes out of the bank, of course, should be on there in some point. So our goal now is just to take this information and enter it into the system, noting that it's not perfect because we know that the dates are kind of messed up here in terms of when the checks were written as opposed to when they cleared, when the deposits were made as opposed to when they cleared the bank. This should be closer, not that big of a problem. And we're making some assumptions. Hopefully those assumptions are good, including that the deposits are going to be mainly from customers, and that the checks here, we're going to have to make some assumptions in terms of how we're going to assign it out to the proper expense accounts. And we'll see those as we'll go, and we'll get a feel for those types of ideas when we're going, hey, there's something funny going on here, and we'll write an open item about it and ask about it. The first month of data input into the system is going to be a little bit longer to do because we're going to have to make some more assumptions, some more guesses. We're going to have to talk to the client and say, hey, what do these transactions look like? Later accounts should be faster to do this. So that's what we'll do next. We'll take this information, we'll start entering it into QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info.